Ladies and gentlemen, good day and welcome to Aeroflex Industries Limited Q3FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this call is being recorded. I will now hand the conference over to Mr. Asad Daud, Managing Director, for their opening remarks. Thank you, and over to you, sir.
Thank you so much. Good morning, everyone. I welcome you all to Aeroflex Industries Limited Q3 FY26 earnings call. Joining us today are members of our senior management team, along with representatives from Strategic Growth Advisors, who is our investor relation partner. I hope that you have had the opportunity to review our financial results and the investor presentation, which is available on the stock exchange and also on the company's website. I'm pleased to report that in the last quarter, which is Q3 FY26, it was another strong quarter for us, which was marked by our highest ever quarterly revenue, our highest ever EBITDA and PAT. This performance was driven by our continued focus on value-added products and our expansion into new and high growth applications, which includes products for data centers and AI infrastructure. Despite the tariff-related headwinds, our quarterly export business grew 30% on a Y-on-Y basis, which reflects a strong customer stickiness and our execution capabilities. Overall, we delivered an EBITDA margin of 23.5%, which reflects the scalability of our business and also the benefits from an improved product mix. We added 1 million meters of hose capacity in this month, which takes our total installed capacity to 17.5 million meters per annum. The balance 2.5 million meters will be commissioned in a phased manner and is expected to be completed by Q2 of the next financial year. During the quarter, we achieved several important operational and strategic milestones. A key strategic highlight for the quarter was our entry into the high-performance liquid cooling solutions for data centers. We completed the first commercial dispatch of the advanced flow control components and skid assemblies for the liquid cooling application. And to support the rising demand that we are witnessing, we are expanding our skid assembly capacity to 15,000 units per annum, and the same is expected to be completed by June 2026. This expansion is fully aligned with the growing opportunities that we see in the global data center and the AI infrastructure space. To strengthen our skid assembly operations, we are also setting up a new plant at Chakan in Pune. This facility will act as a supportive unit to augment the production capacity at our existing plants. Also, we continue to strengthen the production of our assemblies section, and during the quarter, we added 6 new assembly stations, thereby increasing the total number of assembly stations to 46. As part of our ongoing focus towards efficient capital allocation and based on the updated market assessment and the phased demand, the visibility, and also on optimization of our internal resources and capital, we have decided to rationalize the capital expenditure for the miniature metal bellows project from the earlier planned outlay of rupees 23 crores to rupees 10.5 crores. Accordingly, the proposed installed capacity for this particular project would be revised from 240,000 pieces per annum to about 60,000 pieces per annum. And this would be sufficient to meet the near-term demand for the miniature metal bellows, but it also allows us to scale up in a phased manner as the volume increases. The lower upfront investment also helps us to reduce the project gestation risk and also enables faster payback. The balance funds will be utilized towards other ongoing expansion projects where we feel we have the demand visibility and also our execution timelines would become stronger. The ongoing investments in the process automation, which includes both robotic and automated welding stations and an annealing plant, are progressing as planned and with a targeted completion by the end of this calendar year. These initiatives are aimed at improving the throughput and also enhancing consistency and helping us to penetrate into mission-critical business segments. Our subsidiary, Hydare, generated revenues of 8.5 crore rupees in this quarter as compared to approximately 2.9 crore in the same quarter in the previous year. And we expect Hydare's contribution to continue scaling over the next few quarters. And now to talk about our financial performance. In Q3, our total income stood at 121 crores, which is a growth of 21% on a Y-on-Y basis. Our EBITDA stood at 28.5 crores, which is 28% on a growth on a Y-on-Y basis, and our EBITDA margin stood at 23.6%. Our PAT stood at 16.5 crores, which grew at 8% on a Y-on-Y basis with a PAT margin of 13.5%. Our cash PAT increased to 22.75 crores, which reflects a strong cash generation and operating performance. For the 9 months, our total income stood at 317 crores. Our EBITDA was 70.5 crores with a margin of 22.2%. Our PAT stood at almost 38 crores with a margin of approximately 12%. And on a 9-month basis, our contribution of the value-added products, which includes the assemblies, fittings, bellows, and skid assemblies, now contribute 54% of our total sales. The outlook for the remaining quarter of this financial year is very good. We are supported by a healthy order book, strong customer relationships, and increasing penetration in global data center and AI infrastructure market. With a strong cash generative business model, with our deep engineering capabilities and a high focus on value-added solutions and products, we are poised to sustain our growth momentum and deliver long-term share value to our shareholders. Thank you everyone for joining today's earnings call, and we will now open the floor up for questions. Thanks a lot.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Raman KV from Sequent Investment. Please proceed.
Hello, sir. Can you hear me?
Yes, I can hear you.
So, congratulations on good set of numbers. I have few questions. My first question is with respect to the liquid cooling skid system. As we have an exclusive agreement with a US-based company, I think, I just want to understand two things. Are we going to pay some royalty to use their, how do I say, royalty to them, or is it like a revenue share model between the both of the company? And on the unit economics, if you can explain the unit economics of this liquid cooling skid system, that would be helpful.
So in this, there is no royalty or that we pay to them. It's the normal buyer-seller transaction. Although we have signed an agreement with them for exclusivity of for the next 5 years. This is for just the India market. it does not include the overseas market. And also it's in terms of the that is answer to your first question. With regards to your second question, in terms of the unit economics, so it works on a, so we, receive the orders from them, and then we accordingly manufacture the products and then supply to them. So that's how the entire, the business model works.
So I just want to understand that now I think you have around the capacity with respect to this is 2,000 cases, and you're expanding it to 15,000 cases. Cases.
Okay.
Yeah, and
Assemblies, yeah.
yeah, assemblies, yeah. And the CapEx for this was around 100 crores, and you said you can do 300 to 350 crores of revenue at peak utilization. If this is my understanding. So if my understanding is right, your per piece realization is around 3 lakhs.
The CapEx is less than 100 crores, just to clarify that.
Okay. Understood, sir. So when I come to the realization, your realization is around 3 lakhs per piece.
Correct.
At peak utilization.
Yeah.
Is my understanding correct?
That's assuming an 80% capacity
that's what.
utilization. Yeah. Yep.
Yeah. Now I just want to understand, let's say there is a data center that we have that needs to be constructed. Let's say it's 100 crores worth of data center project. How much out of that will be your liquid cooling system skid? I just want to understand the total addressable market with respect to this particular business.
So obviously it depends a lot on the on the entire layout of the project, where it is being built, or what is the megawatt of the project, how many floors, and how much is the space. Because ultimately liquid cooling also depends on how much megawatt is being put on a particular piece of land, if I may say so. Also, it varies from operator to operator. So, for example, data center built by X, would have a different design for liquid cooling as compared to a data center built by, say, Y, or a data center built by Z, because each one wants to have their own proprietary technology for this particular investment. Just to again tell you about the global market size for the liquid cooling. Right now, the global market size as it stands currently, it's about almost close to 3 billion, right? And it is growing at a CAGR of about 33% on every year. I'm talking about the international market, right? Now that is poised to increase to about 21 billion over the next 6 to 7 years, right? So that is the market size of the total liquid cooling. So
Understood.
So then you can actually divide that by the data center market. So you'll get an idea about how much is the liquid cooling market as compared to the total data center market.
Understood, sir. And sir, with respect to Hyder, what's our current capacity utilization, and are we planning to have any further capex with respect to this?
Yeah. So at Hyder, Hyder actually works on CNC machine. So most of the products at Hyder are. So we are all in the process of increasing our capacity in Hyder as well. The same is poised to be announced very soon. Right now we are working at, so in terms of the capacity, in terms of number of pieces, if I can say, so as per the number of pieces, we are running at about 70% capacity utilization. But obviously we plan to add a few more machines and a few more new machines, which will help us to increase our capacity on our existing machines as well. So, with that, we expect Hyder to grow over the next year or so. So Hyder CapEx is planned soon. We'll be able to share the numbers in due course of time.
Mm-hmm. And so, initially, in previous calls, you mentioned that the idea at your optimum capacity can do 45 to 50 crores of annual revenue. Is my understanding correct?
Yes, that's correct.
Okay. And so my final question is with respect to export. What percentage of
Yep.
your total revenue is exports? And if you can bifurcate the export, like where it comes from, how much is USA, how much is EU, and will the
Right.
current FTA signing with EU and UK will be beneficiary for you in terms of growing your export order book?
So, right now, about 74% of our total business, comes from export. And, out of that, almost 90%, 85 to 90% comes from the EU and USA. So if I talk about EU and USA combined, they contribute around 85% of our overall export business. Now, definitely with the FTA, which was announced a couple of days back, definitely we are going to see over the next couple of years, a higher traction coming in from the EU sector. If you see in this quarter itself, our total exports have grown by about 30%. And out of that, EU was a major contributor in that. So, obviously, in the last quarter, there was no FTA, but we strongly feel that, with this FTA being, signed, and obviously it will come into operations in the next few quarters. We definitely feel that it's going to be a big boost for us. Also considering that the fact that it will also make our products even more competitive in the EU market, especially in terms of competition from players or manufacturers based out of Turkey who are getting, duty-free material to be exported to EU. So that would be very beneficial to us as well. So yes, definitely with the EU, would be I would say the strong growth area for us in the near future.
Understood, sir. So just a follow-up, 85 to 90%, can you just give a split with respect to only EU and only USA, if possible?
So the EU right now is about 30%, and the USA is about 55%.
Thank you, sir. I'll join back in the queue. Thank you so much.
Thank you. The next question is from the line of Viraj Parekh from Bullion. Please proceed.
Good morning, sir. Am I audible?
Yes.
Yeah. So sir, just my first question is a follow-up on the previous participant. More than the quarterly revenue, I'm interested in the 9-monthly revenue. Exports has kind of been weak this 9 months financial year ended, and primarily we've seen growth from the domestic market. Correct me if I'm wrong.
Yeah.
Right?
Yeah.
And
So,
in that, sir,
yeah, please go ahead.
So in that, if I look at Europe and America, I feel Europe has been flat. I think it was 59 crore last year versus 60 crore this year in terms of 9 months. America was 129 crore last year and 136 crore this year, approximately a 5% kind of a growth, which is approximately 55-60% of our business. So, if you could just share some highlights in terms of, last quarter we spoke that, not a single customer canceled the orders, probably we are deferring them. So, are we supposed to be a spillover in Q4? Is Q4 supposed to be very strong for us, or is a lot of more pessimism in the American market, for the entire year? So just wanted to understand your thoughts of what's the on-ground situation there.
Yeah. Okay. So, thank you so much for the question. So just wanted to see, to update to you. If you see our Q1 results, right, we had I would say, a very bad Q1 number. So, because of that, you see that our 9 months numbers are still don't appear as good as what they are. It's because of a very, I would say, a very bad Q1. That's why if you see the growth, even after 30% of growth in these particular markets on a 9-month basis, our growth is still in the single digit. But obviously things, nowadays change on every quarter to quarter, right? Now, we're seeing that there's strong demand that we're seeing from, from the export market. Obviously, in the U.S. market, like I mentioned, we did not have any order cancellations, and now we are starting to receive, repeat orders coming on from our existing, customers. The only issue that we are facing in terms of the tariffs is obviously, getting new customers and new OEMs on board, which is taking a lot more time because of these tariffs. But our existing customers are continuing to place, order to us because right now they don't have any alternate supplier. With regards to the EU, like I mentioned also in a couple of my previous earnings call, we felt that the EU would be a strong market for us in the near future, and that is what we are seeing in the EU market, that over the next, I think, a few quarters, we expect the business from EU to increase. Obviously, this FTA, once it is implemented, would definitely be a booster for us in terms of our business to the EU. Yes, domestic market over the 9 months has grown, and the international market has grown lesser than that. But I would say that the kind of disruptions that we had in the international market were nowhere near as compared to as in the kind of disruption that we had in the international market was much more as compared to the domestic market, where we did not have anything. So we would also have to see the growth in terms of the challenges that we have been facing. But I would say despite that, I think the last quarter has been, extremely good for us. And, we expect the same to happen in the current quarter, which is ongoing, and also in the next financial year as well.
So just a follow-up before I ask my second question. Domestic, as you rightly said, we've been doing well. Can you highlight certain areas where we've done well? Have we, are we competing with whom? What are we doing? Are we gaining new customers? Are we gaining more wallet share with an existing customer? And earlier you used to give some kind of an end user industry mix, and I think for this quarter it's not been given. So just wanted to request that if you could, just stay a bit consistent with the disclosure so that it's easier for us to track the performance as well. And if you could just highlight in domestic, where are we doing well in the end user industry mix? Like, where are we seeing more traction, more growth? Because that's been a phenomenal 9 months for us in the domestic market.
Yeah. So in the domestic market, we have seen the two major industries where we've seen a significant uptake. One is the steel industry, that we are seeing good demand coming in, and we have seen it from the ports and terminal industry, where we are seeing significant uptake in orders from various ports and terminals, for our various products. So these are the two industries in the domestic sector. There are smaller, industries, with regards to construction and food and all, but the most prominent ones are the ports and terminals and steel. And specifically with talking about IDEL, so over there we are seeing a very good traction coming in from the railways industry. So these are the three major industries where we are seeing strong traction coming in.
And also I asked if you have, gained new customers or increased wallet share in existing customers in domestic market.
Both. So like I mentioned, so we already had customers in the steel industry and ports and terminals, so we have gained more business from them. And second, we have also entered into new ports where we did not have a presence earlier. In terms of the steel industry, there's no major new customer, but the major new customers have come in ports and terminals and in the chemical industry.
Got it, sir. So my second question is just a bit on the planned pipeline of CapEx which we have. If you could firstly just bifurcate the CapEx that we've done in this financial year up till date in hoses, in bellows, in the liquid data cooling solutions, and versus the cash we have on the books, including the amount that we recently raised? Also, if you could just help me understand the kind of capacity utilization we are on, especially in the, hoses side, and at what level are we seeing? Because I think we are very confident on that demand growing strongly. So how are we, seeing that growth forward in the domestic and the export market at whatever capacity utilization we're envisaging to be in the next 2 quarters or the next financial year? And just the last question would be on the liquid cooling solutions. If I understand correctly, we are using bellows capacity as a feedstock to... It's a mixture, like a skid is a mixture of multiple components, if I'm correct to understand it. What kind of margins are we gonna see? Because I think bellows were supposed to drive our margins upwards, being a niche product. So you've given, like, kind of a 3 lakh rupee average, revenue per piece. What kind of margins do we see, given the exclusivity we have with the U.S. partner?
Okay. First of all,
break it up to cash.
There are a lot of questions.
And,
There are a lot of questions there.
Yeah.
So I would like to...
I think I'll just break up. So you just do on the cash and the capacity front and post that unit economics.
Yeah. So, just to update, we have not yet received the funds from the preferential allotment because we received the in-principle approval from stock exchanges in this week itself. So most likely, in the upcoming week, we would be, allotting, as in receiving the money and allotting or getting the funds from the preferential allotment. So, that is to clarify on one point. Second point, with regards to the total CapEx that we have done across the entire spectrum in this 9 months, which is, in the current financial year, is approximately 36 crore rupees. That is spread across various, the hose business, the liquid, the cooling. Obviously, the investment in the liquid, the cooling, the major investment in the liquid, the cooling would start now, because initially what we did, like you mentioned, is we utilized some of the machines from the bellows plant, and then we bought some of the other machines to kickstart the project in the first phase. And now, since we are expanding or planning a bigger expansion in capacity, we are going to now invest significantly in the liquid cooling space. So that was that. In terms of, obviously, anything else that I missed out from your question?
So what is the cash in hand right now, as on date?
As of 31st of December, it was approximately about 20 crore rupees as the cash balance in bank.
So in your presentation, you've written assemblies, you've added some 6 assembly stations. So I think I think 9 months you said you done 36 crore. Can you bifurcate into hoses, bellows, assemblies, and cooling solutions?
Okay. So, in terms of, assembly is part of the hoses, because that's just one part of the project. So I'll just give you the broad numbers. Approximately, till 31st of December, we've invested approximately 9 crores for the liquid cooling. These all data are as of 31st of December. For the bellows, it is around 5 crores. This is for the 9 months I'm talking about. And for the hoses and for assemblies and for assembly stations and the welding, all of that is about 22 crores. This is for the 9 months.
Right. And for the next months, what was the planned CapEx amount?
So first, obviously, the remaining CapEx to be done for the hoses division. Then we, as we had announced in last month, that we are going to increase capacity for skid assemblies. The CapEx would go into that. And the third one would be for the annealing plant, along with the automated and robotic assemblies that is required, along with the annealing plant for a specific, projects that we have, from a couple of our customers.
So what would be the amounts?
Those amounts have already been, given in the last board meeting. So I would suggest you could refer to that, because the overall CapEx, including working capital and all that we have planned, is around 97 crores. That includes working
Right, sir. I'm aware
capital
of that
and
number.
CapEx.
Just
Yeah.
wanted to understand what would be the peak debt with all the CapEx being done next year?
Peak debt.
Yeah, I'm assuming that we have
There is
taken
no
a part
debt.
of.
No, there is no debt.
Right.
We have not taken any debt.
No, sir, as on date, I know. I'm saying that right now we have raised the money, fund our CapEx. Post that, we will be taking a little bit of internal accruals and some part of debt to do the second line of CapEx for the liquid data cooling solutions. So just want to understand what would be our debt number
No,
at that point.
as of now, we don't plan to raise any debt as of now. In case we require in the future for any short term, I think that would be decided, at that time. But as of now, we don't plan to take on any debt.
Got it. So just last question, in terms
Yeah.
of the unit economics for the liquid data cooling solutions, what would be the margin profile for this?
So, I think I mentioned this probably in my last earnings call as well. Since right now we are dealing with, or as in we have a exclusive contract with this U.S. customer, it will not be possible for me to give you a specific number of margin of this business, obviously due to confidentiality reasons. But along with this particular business, I think we expect our overall margins to remain as expected, as we had mentioned, in the range of 23 to 25% over the next couple of years.
Got it, sir.
Because right now this particular business is dedicated for one customer. So I hope you understand that it's not possible for me to openly share the margins on a public forum.
Sure, sir. Thank you so much. I'll have a few more questions.
Yeah.
I'll get back in queue. Thank you so much.
No worries.
Thank you. The next question is from the line of Sringaraju Ram. The next question is from the line of Pritesh from Lucky Investment. Please proceed.
Yeah. Just from a slightly longer horizon perspective, so now at what sales level is your metal bellow quarterly sales level or annual sales level in FY26 and utilization? And for the capacity that you have put, in which year do you see the peak utilization and the peak revenue on the current capacity? Same way on the skid, the liquid skid assembly side, is 15,000 unit and is 350 crore of revenue. Which is the year or the quarter where we start seeing the peak utilization of this piece?
Okay. So the metal bellows right now is at an annual run rate of 12 crores as of now. We expect this to increase to about 36 crores, the run rate in the next few quarters. Obviously, being very honest, it is a little behind our schedule. We expected it to be much faster, and I think I just mentioned before a couple of questions back in terms of the US market, right? So we expected a big business to come of metal bellows from the US market, but because of this, the tariff that is being slightly, the timelines have slightly gone up. But we also participated in an exhibition recently, and we saw a very good lead generation from that. So we expect the bellows business to achieve a run rate of 36 crores over the next few quarters. With regards to the peak utilization, I think we expect the bellows plant to achieve the peak utilization in about 2 years time from now.
Peak is 100 crores, right?
Yeah, 100 crores.
Peak?
Actually 85 crores.
So 2 years, which means it will go in FY28 or FY29 basically.
FY20, I think it will be by the end of FY28 and start of FY29.
I'm writing FY29 for safety purpose.
Yeah.
Metal bellows. Then the liquid cooling?
Liquid cooling, so with the CapEx that we have planned, and we should expect the liquid cooling peak utilization should be achieved in, I would say, 2.5 years, 2 to 2.5 years.
So peak of about 350 crores
Yeah.
in FY29 again.
Yeah, 29.
And what are the margins in liquid cooling and margins in Bello? GP and the operating margin.
I just spoke regarding the margins for liquid cooling. I mentioned that not possible for me to share because we are right now dealing with just one customer. So on a public forum, I cannot share the exact margins.
Okay. But directionally, are they better or inferior to the existing margins that you have in hoses?
No. So in terms of the hoses, they are better than the margin in the hoses. They are almost in line with the margins that we have of assemblies.
So margins are better than hoses and in line with assemblies. Okay.
Yeah.
Okay, done, sir. And lastly, on the hoses side now, you have a capacity on ground, and then you had these challenges. I don't think that the international challenges are rectified in terms of the tariff and et cetera. So how do you see the growth in the assembly side, the hoses side?
So when I talk about hoses, we have to talk about both hoses and hose assemblies because they are part
correct.
of
Hose. Yeah, correct. Hose and hose assembly.
Yeah. So,
yeah.
If you see this, the last quarter was, we had very good sales in the international market, and if you see over 9 months, over 9 months, the sale might be, and the growth might be in single digit, but obviously there were, the Q1, like I mentioned, was, very modest for us, and hence the overall numbers look not as strong as, what they actually are. So, in terms of the outlook, so I think with this FTA, I think you'll see increased business coming in from the EU because over the last three years almost, I think we had more or less flat sales or barely minimum growth in sales from the EU, from the EU region. But I think over the next 1 year, I think, and hopefully with this FTA being implemented very soon, we'll see higher business coming in from the EU market. US market from the existing customer point is strong. Obviously, like I mentioned, with the new customers, there are still some challenges, especially with regards to these tariffs. Hoping that if the tariffs also get resolved soon, we'll see a significant uptake also coming in from the US market, which continues to remain our biggest market still.
Okay. Thank you very much, sir.
Thank you so much.
Thank you. Participants, please limit your questions to 2 per participant. The next question is from the line of Shankaraju Ram from Omveti Holdings. Please proceed.
Hello, sir. Am I audible?
Yes, you're audible.
Sir, I have 2 questions, both regarding our liquid cooling secondary fluid metal solutions. One,
yes, please.
if our SFN systems are not available, would customers need to redesign their entire cooling system, or can they substitute components without major changes? And the second question is, can the SFN liquid cooling solutions and technologies be adapted beyond data centers? For example, electric vehicle engine cooling or semiconductor direct chip cooling, etc. Something like that, sir.
So if I have understood your question correctly, first question is if SFN components are not there, then will the liquid cooling work? Is that correct? The first question.
No, sir. No, sir. If our systems are not available,
okay,
then the customers have to redesign their entire cooling system, or simply can they substitute our components with competitors' products?
So as of now, there is As of now, we are one of the first movers in this space in India in terms of the components. So, as of now, if we are not providing the system or there is, delays from our end, the only option available to the customers would be to import it. So as of now, there is, the customer does not have much option. And what was the second question that you said?
Sir, can these technologies SFN be adapted beyond data centers? For example, to electric vehicle engine cooling or semiconductor direct chip cooling, some other applications, sir.
So what we are providing is basically, a cooling, or a flow solution. Ultimately it is used for, cooling. Right now it is used for, cooling data centers, but actually it can be used for cooling any other, kind of, system or any other, kind of, application, because ultimately it's a flow control. So you can actually change the design of the flow control, and instead of, say, cooling data centers, you can cool tomorrow, say, a large machinery or say a semiconductor plant, or so the adaptability of and specifically the machines that we have, or that we have already installed and are also in the pipeline to install. They are not specifically meant to for just for data centers. So I'm just saying, tomorrow, if just for if just for any reason the entire data center industry collapses, we can still use our machines to manufacture the flow controls for for other HVAC industries.
Okay, fine, sir. Thank you so much.
Thank you so much. Thank you.
Thank you. The next question is from the line of Nikunj Bhanushali from Kosh Wealth. Please proceed.
Hi, thank you for the opportunity. So, just I wanted to go over through the peak revenues from each division. We have the current 4 to 5 divisions, right? First is the hose and assembly business, then there's metal bellows, there's miniature metal bellows, liquid cooling, and then there's hide air. So, peak revenues from each of the divisions, if you could give me the numbers.
Yeah. Okay. So, with regards to the liquid, the cooling, I think already it was just a couple of questions back.
350 crores.
300 to 350 crores at utilization, at the peak utilization. In terms of the hose and the assemblies business, the hose assemblies business, at the peak utilization of a capacity of 20 million, we would reach, and considering if 70% of the sales comes from the assemblies, we're expecting a turnover of between 650 to 675. And in terms of the bellows, as I said already, around 85 crores at peak utilization. And hide air, as of the capacity right now, is about 45 crores based on the current capacity. So
okay. Metal bellows is for both miniature as well, right?
Yeah. Miniature. So as I mentioned in my speech, we are redeploying some of the capital from miniature metal bellows to the other projects.
Right.
So miniature metal bellows right now, the peak utilization would be about 8-9 crores.
Okay. All right. That's it from.
Overall, if you see, it would be somewhere about close to I think more than 1,000 crores over the next 3 years that we expect to generate.
So right. Yeah. That was just the question from me. Yeah. Thank you so much.
Thank you so much. Thank you.
Thank you. The next question is from the line of Vansh from Invest Analytical Advisors. Please proceed.
Yeah, thanks for the opportunity. I'm audible.
Yes, you're audible.
So, the first question is on the liquid cooling adoption. given that many Indian data centers still use air cooling, what makes you confident that liquid cooling will still eliminate cooling despite being more expensive output? So specifically, what are the key triggers that will drive the shift? So that's my first question.
Sorry, if I've heard you correctly, you're saying that what makes the shift from air cooling to liquid cooling. Am I right?
Correct.
Yeah. Okay. So a lot of the old data centers or the data centers which were up and running for many years, right? They were in the traditional air cooling system. Now the reason for them being on the air cooling is because the capacity of those data centers were actually very small, and liquid cooling as a technology was not developed. I would say 4 or 5 years back. Now with liquid cooling and also with the chip capacities increasing, so we have chips, we can compute much more power. So and if the chips are using much more power, they need much more cooling and at a faster pace. Hence, if you do through air cooling, the cost, the running and the recurring cost of air cooling is huge, and obviously for any data center, especially at a large scale to be viable, the recurring cost has to be lesser. So hence, obviously, the technology of liquid cooling has evolved, or was invented. And now for all the new data centers that are coming up, 99% of them are coming up with liquid cooling only in some form or the other. And the reason is because the liquid cooling, the initial investment is higher, but the recurring cost is significantly lower.
Okay.
So hope I was able to answer your question.
Yeah. And on the line, one next question is, what is the life cycle of this typical life cycle of this liquid cooling solution when it is deployed in a data center, and what drives its replacement demand?
Obviously, in terms of the life cycle, I think it can stay for at least minimum 4 to 5 years without much without much repairs. But obviously, if there are some component or some part of the system which is which gets damaged or which needs which needs to be changed, I think that can be changed easily with the current liquid cooling systems that we are developing. Say for example, if a part of the line there is some damage, we have built the system in such a way that we can actually bypass that particular line for a short period of time, replace the part, and then again bring it on the line. So the replacement is we have designed it in a way that the replacement becomes very quick.
Okay, so the replacement demand is driven by the period.
Mr. Wan,
yes.
May we request you to join the question queue for your follow-up question, as there are other participants waiting for their turn.
Okay, this is a follow-up only. That whether it was the period or technological upgrade.
I'm actually not able to hear you. I'm sorry. You said?
I think the replacement demand will be driven by wear and tear or technological upgrade. That's just last question.
I'm so sorry. I think there's some noise from the back, so that the voice is not. I'm very sorry. I'm not able to hear you. I'm sorry.
Okay.
Thank you. The next question.
Yeah, we can take the next one. Yeah.
The next question is from the line of Ashar Kapadia from Front Wave Research. Please proceed.
Hi, thank you for the opportunity and congrats on good set of numbers. I was just going through an investor presentation of last quarter versus current quarter, and if I look at our capacity addition plans, there's a delay across all our categories like hoses, assemblies, as well as bellows. And specifically for bellows, if I look at metal bellows, the capacity addition plan was 120 to 3 lakh units, and for miniature bellows, it was like 240,000 units. Now that has been curtailed significantly to 60,000 units, and for metal bellows, it's 120,000 units. So just wanted to understand this a significant curtailment it looks like. So just wanted to wrap my head around this. So what's the particular reason behind it?
Yeah. It's basically to clarify on a few points. First is the expansion of metal bellows from 1 lakh 20 to 3 lakh was part of the phase 2. If you see in the last presentation, the phase 2 was as informed in my previous calls also, that we would only start work on phase 2 once phase 1 is up to an optimum capacity utilization. So that was anyways planned for a later time. First of all, that. Second of all, as I mentioned in my speech as well, we have reduced our capital expenditure in miniature metal bellows from about 23.5 crores to, from 23 crores to about 10.5 crores. Obviously, with that reduction, there will obviously be a reduction in the capacity. And the reason is that we feel that right now we want to, as per the demand that we are seeing from the international market for miniature metal bellows, we feel that the first phase, it's better for us to deploy lesser, capital, get the ball rolling, and then over a period of time, as we see demand picking up, then, putting in more capital. So the idea for us is that we want to deploy our capital. We've seen over the past 3 to 4 months that we want to deploy now our capital to the area where we feel that we are seeing a significant demand coming in, and we want to redeploy our capital to those areas where we are seeing the demand as of right now. As compared to investing in capital where we see, demand coming in maybe 1 or 2 years down the line. So that is the strategy that we have. And it also helps us to, in a faster payback, it also helps us to make money faster. So that's the business, call that, we have taken.
Understood. That's really helpful. Thank you and all the very best.
Thank you. Thank you very much.
Thank you. The next question is from the line of Vinayak from Exponent Tribe. Please proceed.
Hi, sir. Thank you for the opportunity. So I just wanted to ask your liquid cooling skid solutions. In the previous call, you mentioned that they are part of the domestic revenue and not the export revenue.
Yeah.
So just wanted to ask, are you exporting these skid assemblies firstly to your customer, and then they are bringing it back, like assembling all the stuff and then bringing it back, or like are you just providing them in the country itself?
No. So we are not exporting any liquid assembly. Skid assemblies. All the skid assemblies that we are manufacturing, or the orders that we have received for the skid assemblies is for the India market only. Right now, as of now, there is no export, and it is just for the India market as I speak right now. Maybe 6 months down the line, we may start with exports, but as of now, there is nothing. As in, there is no export of skid assemblies.
Okay. So you're supplying your customer domestically and
domestically, yeah. Yeah, domestically.
Yeah.
Yeah.
And so what is the visibility we have, like current visibility in the liquid cooling skids, like for the next 1 year, 2 years, if you could give an idea about that?
Well, next 1-2 years is obviously we are doing the capex for the for the skid assemblies based on what visibility that we have been given by our partner, and accordingly we are deploying the capex for that. If you talk about the immediate business, so right now we have a pipeline of about 45 crores that we already have, which is planned for dispatches as per the schedule given by our partner. So that is the immediate plan that we have. But yes, our entire capex for the skid assemblies is based on the projections and the discussions that we have had with our partners. So it's based on, or we are actually doing the CapEx based on the demand, forecast that has been given by our partner.
And so that, like the 350 crore number and the peak utilization, when do you expect that to be done?
29, FY29, like I mentioned earlier.
Sure. Thank you.
Thank you so much.
Thank you. The next question is from the line of Nidhi Tiwari from Adroit Financial. Please proceed.
Hello?
Hello.
Hello?
Ma'am, you're not audible.
Am I audible now?
Can you just speak up a bit?
Am I audible now?
Yeah. Little bit, but you can go ahead with your question. I'll let you know if I'm not able to hear you.
So for now, I have gotten all answers which have been raised by the other companies. So for now, my question is, are there any plans to target new global market beyond the US and current export destinations, where we can diversify the margins? And also, I had one question sorry.
So you were saying diversify beyond the US. Is that correct?
Yeah, beyond the US. Yeah, so that we could diversify our demand risk for the product.
Okay.
Yeah. And also my second question is,
Go ahead with your second question and then I'll answer.
Yeah. So my second question is, with stainless steel, as a key raw material, how are you managing raw material price volatility and its impact on margins? Because it's quite high, right?
Okay. All right. So to answer your first question, so diversifying the risk beyond US. So if you see in this financial year specifically, we have focused a lot on the domestic market, and that we have also seen in terms of the numbers. Also, if you see the liquid cooling, the skid assemblies, right? So right now the entire plan is for the for the sales in the India market. So that also kind of de-risks ourselves from the from the risk of USA. But saying that, despite I think USA is right now our biggest market, as of today, it continues to be so. We are focusing on Europe also, because Europe, especially now with this with this FTA being announced, and it would soon come into force as well. I think we'll see a lot of business coming in from the EU as well. So that is one part of de-risking ourselves from USA. With regards to raw material, so specifically in case of our our orders, we do back-to-back raw material planning. We do long-term contracts with our suppliers, specifically for our major raw materials, which is the thing in terms of the hoses, it's the stainless steel wire and the stainless steel coil. So we do back-to-back, but obviously, if there is significant volatility in the raw material prices, then it affects the margin slightly. But I think right now we've not seen it as yet. The volatility was there a couple of years back when there was significant uptake and then obviously a significant downward trend in the raw material prices. But over the last couple of years, I think it's more or less stable with minor fluctuations. So yeah.
You have a good retention of orders from US. So still we do have a good retention, but we're not getting new orders from them. So will that impact our margin in FY26 or in future, like FY27, because still our penetration is high in US?
Sorry, I didn't get your question. Can you just repeat your question again?
So, my question is, now they have shown that we are not getting new orders from USA, but still our retention is good, right?
So I mentioned that, yes, I mentioned that we are, getting the repeat business from our existing customers. The new customers, yes, we're facing some delays in onboarding new customers, obviously, because of the situation of the tariffs, because
So I got the point. Because tariff
yeah.
we are getting impacted, but still our market share is higher. So for next quarter or for next year, our revenue will get impacted because we are not getting new orders. I agree that we have a rotation of the older customers.
Hello, Miss Nidhi.
Yeah.
We are unable to hear
I was
you.
not able to hear the question, yeah.
Yeah, ma'am, can you please join the line again?
There is some disturbance, yeah, at your back end. So, because of that, we're not able to hear your question correctly. So that's why.
Thank you. The next question is from the line of Arjun from Long Equity. Please proceed.
Hi. Thank you for this opportunity and amazing results. Given the fact that we have a tariff of 50% and we took a price hit of 8%. So how do you see in this backdrop our margins for the next 1 or 2 quarters like Q4 and Q1 of next year?
So, I would still maintain that we look at our margins from a long-term perspective, right? A couple of years back, our margin was around 20 to 21%. Our aim is over the next couple of years to have our margins at up to 25%, right? Obviously, some quarters would be good, some quarters might not be good, as you would have seen from our Q1 was, not so good, and Q3 is, I would still say Q3 is good. I would not say very good, but I think, Q3 is good. We expect the margins to continue to grow in the next, quarters and in the next year. So the target would be to achieve an EBITDA margin of 25% over the next couple of years.
So, no, I'm just like a little curious here, and I would appreciate if you elaborate this more. Even with the tariff impact, you're saying that we would still maintain a margin of 20 to 23%. And with the 8% price hit, am I hearing it right?
Yeah. So what happened is, when we gave a discount to our customers, right, we also worked internally with our, with our engineering team, with our production team, with our, R&D team, and to also optimize, on our costs. Because, the reason is that, in terms of, when we, give out the discount to our customers, we also need to work internally how to ensure that this discount directly does not impact our bottom line, immediately. So we worked internally with our teams to optimize our cost. We also worked with our vendors, right, to ask them to bear also some of the costs, or some of the price that we had passed on, right? So it was a joint effort from the entire team and also from our supply chain partners to help us to reduce the impact of the discount that we had given. And hopefully the tariffs would go away soon, and then our margins would be much better. But yeah, the reduction in the price, sometimes actually makes you more agile, right? Because then you work doubly hard to optimize your cost and to optimize your supply chain as well.
This is fantastic because what I can infer from this is that when things get normalized, and we hope they get very soon, we could actually see a 400-500 basis points increase of margins, right? In that case, because one, we have done internal engineering to make ourselves more efficient, and two, we have an external environment support.
Yeah. So I would not be able to, give you the exact number, but yes, definitely if the tariffs go away, our margins would be much higher than what it is right now.
Okay.
I'm not able to give a specific number, obviously. Yeah.
No, I appreciate it. I totally get the sensitivity of it. Just from a different angle, because we are an exclusive player to one of the biggest US multinational company, and I'm sure they have a huge Asia Pac segment in which they're functioning. How big would India be in the whole APAC for them? I mean, just to understand how big the size could be. Because
you're
we are
talking about
exclusive
specifically
India,
for
right?
the liquid cooling or for their
For the
entire
liquid
business?
cooling. For the liquid cooling, I'm assuming they would this kind of an effort by this multinational company is made across APAC. So how big is India for them in the liquid cooling in the whole APAC?
Well, it's difficult for me to answer on their behalf because I don't know their APAC numbers. I don't know their exact India numbers. So how big is liquid cooling as compared to their APAC? It's difficult to give you a number, but what I can say is that their India team is working as like literally day and night with us, to obviously it was first to start the first dispatches and now to increase the capacity. So I think they want to make India as the second hub for their worldwide supply. So right now the Indian team is obviously focused on the supplies to in India, but whatever discussion that we have had, their ultimate long-term goal is to make the India entity as a global supplier for skid assemblies over the next I would say 3 to 4 years time. So specifically on numbers I would not have because this company is a multi-billion-dollar company. I don't know their APAC numbers, and obviously they are into a huge number of businesses. So liquid cooling is a part of their overall business. They are into multiple different businesses. So exact numbers, I'm afraid I would not have it.
No, true. I totally get that part. And one last question from my end. It could be very specific question. If you see the breakup, I see there's a significant traction in your assembly segment for the 9 months. We have crossed close to 52%. How do you see this traction going forward?
I think this traction is only going to increase. I think the assemblies as part of our overall sales is only going to increase because the entire focus of the company for us, for the entire team, is to increase the sales of assemblies because that's the future that we see. So when I talk about assemblies, right, I'm not talking when I talk about assemblies, I'm just leaving the skid assemblies aside for the time being. In assemblies, the main raw material is basically hose and bread. So for us, if we increase the sales of assemblies, we are actually increasing our production of hose bread also, because ultimately hose bread is a part of the assembly. So the focus is for the entire team is to increase the sales of the assemblies.
Well, if I can just squeeze one last question. You said that what you've done for the liquid coolants can be also used in other sectors, which I'm trying to say that it is a change in design in the hose, and if I understand it very superficially. So what stops other players to come into it if it is just a change of a design? Or is there something which makes us more stickier to the client?
So first of all, whatever the design of the skid assemblies that we have developed jointly with our partner. So it's our partner has worked with us and we have worked with them to jointly develop this entire system, right? So the expertise lie in the design, in the R&D, and in the and in the engineering, and then obviously on the shop floor level, the expertise lies in conversion of the design into an actual finished product, which will be utilized at the customer's end. So see, I would say it is anyone can start any business at any time, right? that never stops anybody, right? The thing is, first of all, you need to have the expertise to do that. Second of all, you need to have that kind of a customer, also to, say for example, if tomorrow, say, I'm just giving an example randomly, say if Amazon is having data center, or if some other company is setting up its data center, right? So you need to have those kind of customers also with you, so that you can actually, give them that solution. So your access to those, customers is also very important. And third is, you need to have. So we have built this engineering and the skills of the entire flow control over a period of the last 15, 20 years. So we know what exactly are the issues that you'll face, when you are controlling the flow of any kind of a liquid in an entire cooling system. Because we have a few proprietary software that we have that we work with, where it shows you the simulation actually shows that in case of the flow being increased at this particular level, you'll actually have breakage or damage in this particular area. So these kind of expertise and skills, they are developed over a period of time. It is difficult for anyone to replicate in a very short period of time. So that's why you'll see that there's the moat that we have in this business right now.
Thank you. Ladies and gentlemen, due to time constraint, we take that as the last question. I now hand the conference over to the management for the closing comments. Over to you, sir.
Thank you so much, everyone, for your questions. If I think there were a couple of people who I was not able to hear their questions, so I would request them to probably send their questions to the SGA team, and we'll arrange to reply to you at the earliest. And if I'm not able to answer anyone else's question as well, so just request you to get in touch with SGA, and we could answer your queries, or we could schedule a meeting as well. So thank you so much, everyone.
Thank you. On behalf of Aeroflex Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.